JANX is down 41.48% and it's currently trending. This is Tuesday, the 2nd of December 2025. Intraday low in the post market session of yesterday, $18.2. It has actually gotten a bounce, but yeah, still down regardless. Okay, so let's see what we have. It's not exactly high beta stock, but volatility is expected to get a lot stronger in the coming days. Yeah, so the company disclosed some of its data, and market participants are not exactly pleased. Let's hear about all of that.
JANX is trending after the release of interim data for its prostate cancer candidate JANX-007, which came in as a mixed bag and triggered a sharp sell off. While the results technically landed within analyst expectations, they fell short of the buy side's much more aggressive hopes, as noted by BTIG. That gap in expectations has become the core storyline. Analysts are largely reiterating their constructive long term views, but investors who were positioned for a clear breakout moment were disappointed. The data has set off a heated debate in the community. Some investors argue that the efficacy and safety profile still look competitive, especially for an early program, while others say the results don't measure up to benchmarks set by Novartis' Pluvicto, which remains the dominant reference point in the space. There's also chatter about whether JANX 007's dose limiting toxicities and response depth raise questions about differentiation. At the same time, several traders believe the sell off may be an overreaction, pointing out that the platform is still early, the study isn't fully matured, and Jenks has multiple shots on goal. That's fueling attention toward the next catalyst, particularly Jenks 008, which the community sees as the company's next potential prove it moment. With sentiment now sharply reset, traders are watching closely to see whether upcoming data can rebuild confidence in the pipeline and stabilize the stock.
Okay, so that's the same plunge we are looking at here. Extrapolation of its 3-day moving averages, 3 period moving average is saying that it's going to bounce. Yeah, it has actually had a bounce, so it's saying that it might just hold it and might take it to a high gear from Thursday. Okay, even though Thursday not is not that long from today, not that long from today. I mean, a lot can still happen between now and then. Okay, but in any case, we have been able to digest all the data, all the near-term data surrounding all that is going on right now. So what we have is that the price pressure momentums, they measure the angle of attacks of the various moving averages. Let's have a look here. Let's apply the price pressure momentum one, which measures the angle of attack of its 10-period moving average. So that's what we're looking at right now. It also tells us it's the algos as well. Yeah, this also gives us an indication of what the algos are thinking, and also what the positions are like. Positions, for instance, this tells us about the positions opened 10 days ago, whether they are in profit or just neutral, and all those sort of things, amongst other things as well. He also tells us about momentum. So momentum is expected to continue to dampen, or continues to expected to continue weakening until maybe Thursday, when it's expected to pick up. And also that is also what the extrapolation is saying, that it might spike from Thursday as well. So in any case, yeah, here we have the price pressure momentum, the price pressure momentum one. Okay, it's gives us an indication of what positions opened 10 days ago are like. So they are now currently, obviously, as you can easily imagine. So not 10 days ago, 40 hours ago. This is a 10 period moving average, and this is a 4 hour chart. So in other words, it's 40 hours ago. So positions opened 40 hours ago, as you can easily imagine, are not in profit. The stock plunged yesterday, the first, so that's hardly up to 24 hours. So positions opened all the way back then are not in profit. So it has a negative. This tells us how fast that moving average is dropping. It's dropping 47.12 points every 4 hours. Yeah, that's what it's doing. That's what the trend means. Okay, so extremely bearish, extreme bearish trend mode, steep negative angle, first derivative. Accelerating downward. So this tells us about that buying pressure, and this tells us about the pace. So the buying or selling pressure. So right now the selling pressure is in effect because it's negative. But however, the second derivative, which tells us about its pace, is positive, indicating that deceleration of the selling pressure is already in effect. The interpretation, the 10 period moving average is plunging rapidly, but the second derivative suggests the selling pressure may be exhausting. Probability of convergence 15 to 20% in the next 5 to 10 sessions without a major catalyst. So 5 to 10 sessions is talking about the next 20 hours, in the next by in less than 1 day, or close to, or beyond, or more, between 20 to 40 hours, we are looking at a possible convergence without any catalyst, because the stock is plunging. It's going to meet the price that is also rising as well. It has had a bounce, and it may continue to pick up a bounce. Even if it doesn't meet it, it's plunging anyway. It's going to meet it. There's going to be a convergence somewhere, and that probability is 50 to 20%. Okay, so as you can imagine, the 21 period moving average is equally strongly bearish as well. Here they have it's no longer, the selling pressure is still very much in effect, but they are buying. They said, yeah, the selling pressure is declining. Yeah, okay, the selling pressure is dead. They have already sold, so they've left their mark on the stock. But what we're looking at right now is buying pressure. You can see that this is positive buying pressure. The pace is growing. Okay, so bearish, but showing signs of stabilization. Probability of price maintaining discount 70% near term, but positive derivative suggests a potential floor forming. Okay, so that is what we have here as well too. Still declining. The 40 period moving average, selling pressure has been left on the stock, but buying pressure has kicked in. Yeah, that's also the case on its 200 period moving average. Severely bearish as well. Let's have a look at it. Yeah, that's the 200 period moving average. Not as bad, not as bad. Obviously, being the slowest, it's going to react. Not as not. Yeah, it's going to show the most lagging of reactions. So the market grid gives us a range of prices within which the stock has a potential to trade within. Okay, so these are support values, and these are resistance values. So it's currently at 19.95. Has recovered 19.95. Okay, so this is where it is. It's in between the this 21.63 and 23.56. Yeah, it's in between there. Okay, so probability of it, retesting, getting close to that sort of level will be less than 55%. Probability of it getting to 23.56 is 33.35, and you get a drift. So the second derivatives across all those moving averages, all those price pressure momentum suggest that downside momentum is exhausting. The most probable scenario is a test of 21.63. Okay, as oversold conditions unwind. Okay, so trade setup, short-term trade, 3 to 10 days. Mean reversion bounce to first resistance. That will be 19 to $20.2 current levels. Okay. First target 21.63. Yeah, that's that one there. Yeah. This one there, 21.63 first target. We have that as 55 to 60%, to the 3.56 probability, 30 to 35% stop loss. This is not a recommendation. This is not a recommendation, even though the technicals sound. There is a case that a bounce could happen. That there's a case that this is not bad, not that bad. Does not mean that this is a recommendation for you to buy or anything like that. It looks like a buy the dip opportunity, but whatever you see here is not a recommendation that you should buy or you should trade. Okay. Yeah. So the rationale for this trade or price pressure momentum, all price pressure momentum second derivatives are positive, momentum decelerating, negative momentum decelerating, suggesting a short-term bounce is likely. That is 33% discount to SMAs creates a rubber band tension. Low volume, 17.4K suggests a capitulation may be near. Yeah, low volume as well. You can see not a lot has really traded. It doesn't really fall to this. This is not. This is well. I can still. We can still. I would. I don't think this is low volume. This is high. You can see it's 50-day average is 1.099 million. Okay, and we're still in the pre-market session, so it's not exactly low volume, but the volume is referring to is over the last 4 hours since we picked up the data. So it's not exactly accurate. So that's why this is not exactly a recommendation for you to apply. So long-term trade, 30 to 90 days. Okay. Yeah. Rationale, the price pressure momentum 200, which is referring to its 200 moving average, is still bearish. Okay, with positive derivatives indicating that long-term moving average is stabilizing. Historically, stocks tend to remain at 33% to all SMEs indefinitely. The low targets of 30.51 and 32.36 suggest institutional targets significantly higher. Okay. Risk factors. The negative price pressure momentum one indicates a severe technical damage that typically requires time to repair. No established pivots. The current data suggests a lack of recent support and resistance confirmations and all that. So, conclusion: the setup favors cautious accumulation for mean reversion trades rather than aggressive positioning. The second derivatives across all price momentums are the most bullish signal in an otherwise bearish technical picture. Best approach: small portion sizes, scale in on a weakness, and target the path of least resistance, which will be from from this one to this one to 121.63 to its let's see it's 200 is what 200 price pressure momentum 200 is what let's see what we have. Do we have that value at all? We don't have, okay, yeah, to 26.32, yeah. Okay, so have a look and see what you make of all of these, and I'll continue to update you. Thank you very much for watching this video.